KPMG releasing its annual CEO Outlook survey, gauging expectations for the economy from 100 U.S. CEOs and providing insight on companies' responses to the pandemic. Joining us right now is Paul Knopp. He is the U.S. chairman and CEO of KPMG. And Paul, welcome. Glad to have you with us this morning.
Becky, thanks for having me on your program.
Let's talk about what you're hearing from CEOs, because obviously the news has been pretty grim as we watched earnings season. Almost every company, even those that were performing well, withheld their guidance for the year because they just don't feel like they know exactly what's happening enough to kind of give economic outlooks for what they're seeing. I think that's what makes your survey so interesting right now. What did you hear from these CEOs?
Sure, Becky. Many CEOs are reporting that they're more confident about the growth prospects for their own companies over the next 3 years than they were at the beginning of the year. Slightly more confident about the growth prospects for their own companies than the domestic and the U.S. economy. We also found it interesting that CEOs are indicating they've accelerated their digital transformation by months, in some cases also years. And then probably the other thing that I think is most interesting is that talent risk has really spiked and emerged as one of the most significant risks companies see as a threat to future growth.
Talent risk meaning losing the employees that they most want to hold on to?
Yeah, Becky, I think it's a couple of things. One is that if you think about today's more virtual world, you can interview, onboard, and migrate or integrate employees into your environment without ever physically seeing them. So talent can move much more easily. But it's also about the hot skills, cloud transformation, artificial intelligence. Those kinds of skills are really hot in the market, and companies are concerned about having the right people for those digital transformation efforts.
I mean, that's kind of stunning to hear that they're worried about talent and that this could be a situation where some employees really get to call the shots and decide what they want and how much they're going to get paid, even at a time when we are talking about such incredible unemployment, double-digit unemployment in this country.
No, it is very interesting. And again, I think it's more about those skills that are needed to digitally transform companies. Companies are thinking about how they operate in a more remote environment today. So they're investing in digital collaboration tools, digital workspace tools. They're trying to put technology in the hands of their employees to ensure that they can operate in this much more digital world. It's also interesting that digital transformation includes transformation of operating models and business models. So companies need to be prepared for a different kind of future with more remote working.
Paul, companies are willing to invest money right now when it comes to technology and making sure that they have a digital strategy. But what about other investments? Are there those falling by the waysides because there's so much uncertainty out there? I was listening earlier this morning on the program before us. They were interviewing a guest who said that there are no new projects when it comes to commercial real estate.
Yeah, certainly commercial real estate. The study indicates that companies are going to rely less on office space and more on remote working in the future. But I think right now at this time, Becky, it's more about prioritizing where you invest. So at this point in our history, companies are thinking about how they digitize the customer experience. So they're very focused on prioritizing investments around technology to ensure they're prepared for what may be a very different future. And you see certainly companies that are trying to determine how they operate digitally, transforming their digital business model to ensure they can meet customer needs in a much more remote fashion, more virtual fashion.
In terms of employment overall, what did the CEOs say? Are they planning to beef up employment, or is it really just with key areas with certain talent that they're willing to spend money and overall they may be laying off additional people?
Becca, we didn't specifically get into that question, so we can't really speculate on companies' hiring plans. But I don't think that the fact that companies are prioritizing digital investments means that they are deprioritizing workforce investments. Companies will continue to invest in education and bring in the right kinds of skills. And over time, I think, companies are going to have to look at the types of skills they have. The growth prospects that the survey revealed were growth prospects that were low to moderate, 2.5% to 5.5% over the next 3 years. So companies are still going to grow. I'm sorry, Becky,
yeah.
go ahead.
Go ahead, finish your sentence. I'm sorry.
No, I was just going to say that they're still going to invest in people, but at this time they're prioritizing what they need to put tools in the hands of their employees to make their employees more effective and efficient in this environment.